Okay, dokie. So, risk disclaimer as always. Read this through. I'm not gonna go over it. I think those of you that watch my channel get the point. You can lose money. Just be careful. So, I want to go over E-mini S&P for my own benefit and the benefit of other people, especially because this can really help your learning curves, because when you hear other people's opinions, you get feedback, and if other people are thinking the same thing, it's viewed as a sense of encouragement. So, I'm going to get right into this, starting with the dealing range. So I'm trying to get better at this, because it's probably one of the things that in my growth is not the best, because sometimes I confuse every up close candle and every down close candle as an order block, and I have to be very, very careful when I do that, because if you choose the order blocks, I mean, obviously you're not going to choose the right order block every time, but if you choose the wrong one more than 50% of the time, you're going to not have the best results. So the order blocks that you want to be choosing specifically are the ones that are showing displacement afterwards. So meaning that when it forms and it goes and passes through the opening price of an up close candle, which is a bullish order block, or a bearish order block, you want to see movement. Like, you don't want to see something like this, like right here, like when we pass through this up close candle. I mean, yeah, it moves, but you want to see the most amount of energy as you possibly can. Now, does this qualify it? Yeah, but the thing is the narrative down here was a little bit different, so we were in a consolidation. This market right here, specifically, I know it doesn't show all the data, but this market right here is very, very tricky, in my opinion, to read. And you have to be very, very careful, otherwise you're going to get your butt smoked. So it takes a lot of study, and a lot of time, and a lot of effort to understand where price is going, especially when we're consolidating on a weekly chart. And it also takes more than one market. You need to look at the NASDAQ, you need to look at the Dow, you need to look at the dollar index, you need to look at interest rates, and all that, and it takes a lot of time to understand where the market's going. So I'm not going to go into this, I'm going to focus on over here. So I have a dealing range right here where I take the swing high, which is this high right here in the middle, this up close candle, the short-term, sorry, I said that wrong. It's a short-term high, so this candlestick on the left is lower. This candlestick's high, specifically, is lower than this candlestick right here. And then the candlestick to the right of it is lower than this candlestick right here. So this qualifies as a swing high. Obviously, we need to pass through it to make sure it's a swing high, because you can't, like right here, this candle right here, it could easily spike up in there and go right past it and close on this fair value gap. But it didn't do so, and once it passed through this opening price right here on this candle, which you look up at the top left-hand side of your screen, where the numbers are at, that says the open, high, low, and close. You look at the opening price, which is 446625 is your opening price. Once it passes through, that becomes an order block. Now, just because it passes through does not mean that it's going to be a high probability. It just means that you have an opportunity to see a bullish order block, or bearish order block form. When that happens, you're looking for displacement. So obviously here we see down movement. We see, 1, 2, 3, 4, 5, 6, 7, 8 weeks of down movement, which is typical of September and October. And you see a fair value gap form. So this, to me, is noteworthy and worth looking at. I really like that we took, in the process, sell side out. So below this old low is sell side. I'm not going to label it, that's what it is. If you watch videos, you should be aware of that. So ultimately speaking, when we took the swing low out, it is meaningful because it gives us context to where we could be returning into a longer time frame premium. So premium is basically like what I've been showing in the last couple of videos, where you get equilibrium versus discount and then equilibrium versus premium. So now we're forcing our way up into premium. We have to be paying attention up here. Specifically, the levels that I'm looking at is, I've just learned that you can take consequent encroachment of this swing high to the fair value gap high. What I mean by that is you take a Fibonacci and you snap it to this candlestick's low and this candlestick's high. That is a key level that I've learned. I don't remember which video it was, but I learned that in a video, and I think it's really helpful. So 44625.5 level, that is a key level. And then you also will have the consequent encroachment of this level. So 443875. That is a key level. You'll want to pay attention to that to see if we get movement around it. Other than that, I would be looking for this bearish order block right here to act as a resistance factor. The volume imbalance right here between these two candles, not so much I would be looking at that. I'd be more looking at the mean threshold, the open of this candle as well, to see if we get bearish movement, because I personally think, now this can all change once we penetrate the mean threshold of this up close candle. If we penetrate that on a closing basis, from what I've learned, we could go higher. Now, if we fail to penetrate that and we stick around like consequent encroachment of the fair value gap or consequent encroachment of this candle's high to this candle's low, which I just showed you, just go back in the video if you want to look, and if we stick below that and the body's closed below that, preferably even on a weekly chart and a daily chart, I really want to see that, because I would love to see these lows down here get pierced, because they're really smooth. They're relatively equal, and that's just what I want to see. Now, from there, I don't see any reason why we wouldn't have a retracement to go higher and then go lower, but that can all change. It just depends on what the market offers. But I do ultimately think for now that we're going to be bullish for a while, and then we're going to turn around and be bearish, and we're going to go to new lows. I am not going to sit here and say that that's ultimately what's going to happen, but I am looking to see if that does happen. Now, what changes that is if we get displacement above this gap right here. If we leave this fair value gap, I'm going to watch the behavior of price action around it, and if we can go above it, penetrate the mean threshold of this bearish order block, then I do ultimately think that we're going to seek new highs in the markets. But we all know there's a lot of war going on, and that could change. So if we do not have that happen, that would make sense because of war. The things are just like ridiculously expensive right now, and I think it's ultimately going to get a lot worse, because it's just sometimes that's how it works. But do I want to be wrong? Do I want to see it go higher? Yeah, I do. I prefer that, and I prefer the dollar go lower, but we'll see when we get there. So be mindful of this fair value gap, this order block, and these relatively equal lows. But moving forward, I think that we're going to see higher prices to then see lower prices. So thanks for checking up on this video. If you found this useful, then hit the thumbs up button. That way I know that people are actually learning from me. But ultimately, I'm just posting these videos and just doing my own analysis to help other people, and they can see my opinions as well. So, other than that, I'm going to wrap it up. Hope you guys learned something, and peace out.